Ahead of the 50th anniversary of the Banker's Top 1000 World Bank rankings, celebrated in our July 2020 issue, we are taking a look at the regions to see how the banking industry and financial services have evolved and developed over the past 5 decades. I'm Kimberley Long, Asia editor of The Banker, and I'm talking to David Wong, head of North Asia Bank's ratings of Fitch. Hi, David. Thank you for talking to me.
Hello there, Kimberley. How are you doing?
I'm good, thank you. So to begin with, what have been the main banking trends that have changed in the banking sector in Asia over the past few decades?
Numerous, from demographics, globalization, regulatory changes, to the use of technology and sustainable finance. I think all of them have been very influential in changing the banking sector in Asia. The use of technology in particular, and the exponential use by banks have really changed the way banks interact with their customers and how the customers interact with their banks, how banks sell to their customers. Also recently, sustainable finance has become a focus on how banks make their decisions on lending and how investors in banks make their decisions when they invest in banks. Fitch, as a rating agency, started assigning ESG scores, really just explaining to investors how ESG factors influence the way ratings are assigned to banks.
Japanese banks in particular had a period of success in the 1980s and the 1990s, but they've really fallen down the rankings since then, are really pushed by the economic climate in the country. Do you see them as developing and moving back up the rankings again?
If you look back into the 1980s and 90s, the growth of Japanese banks really mirrored the economic growth of Japan as a nation. There were ups and downs, but it was really not uncommon to see growth hitting 4%, 5% regularly in Japan. But since the bursting of the asset bubble from the mid-90s onwards, Japan's economic growth has become much more subdued. And not only that, there's been periods of deflation or very low inflation, and at the same time, very low, if not negative, interest rates. Such environments have driven Japanese corporates to invest less. And so in terms of appetite for loans, that's diminished. And also it's made Japanese banks more difficult to enhance profitability throughout the period since we've had low to negative inflation. So in terms of them developing and moving back up again in terms of asset size, I think that very much would depend on the path the Japanese economy takes. Japanese banks have also, in the past decade, investing overseas, particularly in emerging markets in Asia, where typically those economies have higher growth, but also high risk of doing business. So in terms of whether we are actually going to see a sustainable growth in Japanese banks, when we're talking about assets, I'm thinking that there may be more different economies, banking sectors that may register higher growth than the Japanese.
So looking kind of at the region more broadly as well now, which countries do you see as having strong potential for future growth in their banking sectors?
So I'm going to cheat a little bit and say that I think pretty much all countries have the potential for strong growth, especially for countries that have started from a low base in terms of economic development and also financial services sector development. I think the key here isn't necessarily a few years of strong growth, because frequently we've seen in a number of jurisdictions over the years where growth has been strong. Typically, it involved an aggressive move up in risk appetite and a relaxation in risk controls, which may not lead to sustainable growth in the longer run.
There's really been one country that has been a success story, not just regionally, but globally, and that's China. We've seen the Chinese banks have a meteoric rise in the past decade. What have been the key reasons for China's growth at this time?
Similar to the Japanese banks, I would link the Chinese banks' growth to China's GDP growth over that same period. On top of that, there was a significant amount of credit stimulus after the global financial crisis during the period 2008 and 2009. In general, the Chinese banks run a volume-driven business until fairly recently. They have often competed using their balance sheet strength, in particular since their IPOs of the larger banks in 2005. And often the strategies were market share driven. But over the last past 10 years or so, we've started to see a shift domestically with the mid-size and city commercial banks starting to become more aggressive in non-loan and also shadow banking sector growth before the regulatory tightening that kicked in 2017.
With all these smaller banks as well also gaining strength and growing, do you see the Chinese banks continuing on their strong path going forwards? Do you think that we will continue to see Chinese banks dominate the top 10 in the years to come?
I suspect that is likely and predicated upon Chinese economic growth continue to be above peers. At present, I would say Chinese banks' asset growth is constrained by capital headroom. Not forgetting that the top Chinese banks are also globally systemically important banks, GSIBs, and will be subject to higher capital requirements, minimum capital requirements. So they obviously have to focus on looking into meeting those requirements. And if a bank is looking to increase capital and capital as a percentage of risk-weighted assets, if you grow your risk-weighted assets, then you also need to grow your capital more in order to have that ratio go up. So at the moment, we see, for example, whether the Chinese authorities would use aggressive credit stimulus, similar to what they did in 2008, 2009 to strengthen the economy. We don't think that's likely. And that's just a basis of Chinese banks having to add to their capital levels.
Excellent. Well, thank you very much for speaking with me, David. And it's been really interesting to talk to you.
Thank you. Thank you for having me on your program.